What is going on, traders? Welcome back to the Traveling Trader. Happy Friday to you beautiful traders. Let us get right into it. I want to talk about why Bitcoin is stuck at this level. What could possibly be next for Bitcoin in the short term? I've already discussed what I feel is going to happen in the long term, but we can go over that again. And then what is going on with the stock market? Gold is up, oil is up, stocks generally are down. Unless you're Tesla, but there's also a reason for that as well. And what stocks am I looking to buy the dip on now? As you know, 2019 has been an insane year for us, as well as most people who were bullish in the stock market. But I feel like we bought a lot of these stocks at the right times. If you're part of our trading group, you get access to my portfolio, which I send weekly updates on, and you'll see exactly what I'm holding. GLD, for instance, gold is back to its 7-year high, and we are holding a good amount of GLD in the portfolio. And all of my stock picks are sent in the trade alerts on the Discord. So sign up if you want access to that. You also get access to the crypto trade alerts, and I do group voice chats with the community as well, where we go over strategies, stock picks, coin picks, charting, technical analysis, etc. So you get a lot of value. Sign up if you want access to that. But yeah, let us get right into Bitcoin, and then I'll go over the traditional markets as we usually do. So Bitcoin is stuck at the 50 moving average, and these levels they're not magic. I mean, they're there for a reason. These indicators are there for a reason. You could see Bitcoin stuck at the 50 moving average going all the way back to December 23rd when it tried to breach it. It got rejected, and now we are at the 50 moving average again. So will Bitcoin break through? Well, that all really depends on volume. As you know, crypto moves really only because of volume. There aren't many fundamentals that drive the crypto price. So far, the volume is looking bullish. It's above average, right? This line right here is the moving average for the volume. And you'll see back here when we tried to break through the 50 moving average going all the way back to October, and we finally breached it, the volume was healthy. But I do believe we need another day of volume, at least like this, in order to close above the 50 moving average. Now, again, if you follow the alerts, we bought a shitload of Bitcoin down around the 6,500 level, so I'm not fretting too much. And we've been in this descending channel going all the way back to July, really, right? So until we break it, Bitcoin is going to give you a clear-cut sign of when it's ready to break out in the long term, right? If we break this descending channel here to the upside, which is the expected move coming out of descending channels, then you'll know that Bitcoin is ready for another rally. I mean, this is clearly the trend that it's following, hitting resistance a zillion times, going all the way back to July. So it is respecting the resistance of this channel currently. But baby steps. In order for that to happen, we need to close above the 50 moving average. If we close above the 50 MA, the next logical point is around 7,900, which is 100 MA, and then the resistance of this channel, which currently is around 8,500. But 8,500 seems like an impossibility right now. However, people forget that it was just October 26th that we hit a high of 10,300. And I bet you, if I quizzed you on that and said, when was the last time that Bitcoin was above 10,000, you would think, sometime in the summer in June when we, hit 14K. But no, it was only October 26th, just, not even a month before Thanksgiving, that we were at 10,300. So these things can happen fast, and we tend to micro monitor these charts. And so it seems like it was a long time ago that Bitcoin was at the resistance of this channel, but it really wasn't that long ago. Now, if you want to engage in a little bit more risk, what you can do in the short term is surely you can short Bitcoin here at the 50 MA. That would be the smart money at the moment, right? Because that is currently resistance. It's clearly resistance for Bitcoin. So you can short at the 50 MA, take profits at around 7,200 and below in the short term. That doesn't mean that you don't think Bitcoin is going to rally in the long term. And speaking of the long term, if we take a look at a long-term chart, and there are many of these floating around. Unfortunately, this one has been blacked out, but I got this from medium.com. But there's tons of these halving charts floating around where you could see what happens in the long term before a halving. And it is kind of the same cycle that has happened the last couple of halvings, right? And it's actually playing out if you fill in this data with the current prices, right, the recent prices, it actually follows what's been going on before, where you see this reaccumulation here. This looks like around the 7,000 and just below level before the halving in 2020, which obviously we're now in 2020, and it's expected to happen in May. And every time after each halving, we establish a new high. I mean, it could take a year or two after the halving, so don't expect it to be a momentous event, like a singular momentous event where we see a new high right after the halving. It's gradual. I mean, if you look at the rise right after the halving, it takes a long time, because the theory is that Bitcoin, with the supply being suppressed, right, you get half of the reward for mining Bitcoin now. So with the supply being suppressed, that intrinsically raises the value of Bitcoin as the supply dwindles. So it's something that happens over time in a more macro view. So that's my long-term view on Bitcoin. Has been pretty consistent. And in the short term, like I said, you could plausibly short Bitcoin here, and it'd be a pretty low risk short, because you could set your stop limit right above the 50 MA in case things don't work out. And obviously make sure that your leverage positions are sized adequately, right? You don't want it to be 50% of your portfolio. Just like with stock options, you want your trades to amount to 1 to 5%, your risky trades to amount to 1 to 5% of your total portfolio, because these things are leveraged. The profits are magnified, right? So if it does end up going your way, you do get a lot back for a minimal capital risk. You don't need to risk 100% of your portfolio. 1 to 5% is usually what I shoot for in leverage trades, even in option trades. The goal is not to retire overnight. The goal is to make incremental gains multiple times over and over and over, so you can generate a steady stream of income. And as those gains are compounded and your overall portfolio size gets larger, then that 1 to 5% that you risk every time you engage in a risky trade represents a large dollar amount, or a larger dollar amount than it used to. So where 5% of your portfolio might be $100 when you're first starting out, or even $50 when you're first starting out, over time, if you keep a strict strategy and don't compromise, that 5% eventually could represent $500 or $1,000 of your portfolio. And that's the goal. Really the dream of retiring overnight, that's like hitting the lottery. I, for one, don't know any traders that have retired overnight from trading. I mean, that's probably something that was just a Hollywood myth. Now, there's definitely a few people that got lucky. So say people that forgot that they had 1,000 Bitcoin on a hard drive somewhere, and then all of a sudden Bitcoin is $19,000 and they're millionaires. Yes, that has happened, but that's not an active investment strategy. That's literally akin to hitting the lottery. All right, let's go over the traditional markets, and I'll start with the obvious world news about the conflict in the Middle East, the brewing conflict in the Middle East, where the U.S. has reportedly killed a top Iranian military figure in Iraq. Seemed to come out of nowhere, and because of that, naturally, Iran vowed that it would hit back in some way, and so now there are 3,500 additional U.S. troops headed to the Middle East. So politics aside, what did that do to the market? Well, the markets took a hit today, obviously, after days of bullish gains. You see oil shot up almost 3% today, and gold is up 1.5% as traders pulled out some funds from the equity markets and put it into gold. GLD is one of our holdings if you do follow the alerts and you get updates on my portfolio, and it is now back up to around the 7-year high. GLD is just an ETF that follows gold. It's a lot easier to buy this than buy physical gold, and you could speculate on gold's price in real time as opposed to if you had to buy the physical metal itself. Plus, I don't have anywhere to put it. And UWT, which is an oil ETF that we've been using to speculate on the price of crude oil. We've been doing that all of last year, really, after hitting the support, buying, selling at resistance. And it looks like we're nearing that same resistance point. Here, back in September, this is when the Saudi oil tankers were hit, reportedly by Iran. Whether you believe that story or not, that's what was reported. And we see this large gap in UWT as oil hit this resistance point and fell back down. So it will be interesting to see what we do here. I feel like if the conflict continues and gets dragged out, we will break this resistance level on UWT. This right here was a one-off event, and there were no really reported retaliations coming from this event, and that's why gold shot back down to support. So If the conflict does continue over a period of weeks, then I think we will see oil prices rise and UWT will continue to rise. This is a 3x ETF. It grows at 3 times the crude oil prices. So now what stock am I looking to buy the dip on? Well, it's related to this story, and it's American Airlines. Now, all airline stocks took a hit today because of the rise in oil prices, right? Airplanes naturally need a lot of fuel. So when oil prices rise, it has an inverse relationship with the airline shares. And I've been eyeing American Airlines for a while just because it is a stock that actually has really good fundamentals. The company has really good fundamentals, but it just was not incorporated into the bull rally that we saw in 2019. And as you know, if you've been following my strategy and you've been following the channel for a while, I don't like to buy the high. I do like to buy the dips, which is why I'm not advising people to buy Tesla, for instance, but we bought Tesla when it dipped back to around 332. Going back to American Airlines, we're forming this symmetrical triangle now, and we're at the support of this triangle. So I'm definitely looking to buy the dip on American Airlines here. If you look at the weekly, we are at a support level that we bounced from in 2013. We bounced from it in 2016, and we're at that same support level now. So there is insane growth potential on American Airlines, especially if you're getting it at a discount. It doesn't mean that it's going to rally or moon overnight, but it is a good holding to your portfolio at discounted levels, right? You want to buy things at a discount. So I will be sending this out in the trade alerts. I did send out an options play on Amazon, which is playing out very nicely. Amazon back up now around the 1880 level. Barring a market crash, I do anticipate Amazon crossing 1900. It is one of the major tech stocks that got left behind in 2019. It was really trading sideways for the most part. I mean, we did have the small blip in July where it did hit above $2,000, but really has been trading sideways for the second half of 2019. It was pretty lackluster, but I think a good area to accumulate a really valuable company. And lastly, I'll round out with Tesla. We're up 35% on Tesla, even more for those that engage in the options play. And on Tesla, yeah, I mean, obviously these are highly inflated prices. We're dealing with all-time highs. And for those that are in the stock market for the long term, yeah, sure, you can continue to dollar cost average. But for me, I hate buying things at all-time highs, especially when the market is really shaky. I mean, it was just back in June that Tesla was under $200. So I'm happy to take the gains. I do see Tesla hitting close to $500, especially as earnings is coming up on January 29th. Tesla did beat expectations for the number of cars it delivered. The Gigafactory is looking to get done in March of this year, right? The third Gigafactory in China. It did start delivering the Model 3s that were made in China at a 10% discount. And there's a lot of obvious hype and growth surrounding Tesla. I have a minus 10% trailing stop limit on Tesla. And if we do retrace that much, then I will consider buying back in depending on what the stock does after it retraces. But yeah, I mean, on something like Tesla, all you could really do is pray for a dip and buy in if you haven't entered Tesla in any way. Anyway, that is it for this video. Go ahead and leave a thumbs up if you got anything out of this video. Leave a comment if you have an agreement, disagreement, comment, question, etc. Sign up if you want access to the trade alerts. I do have a couple spots left for the one-on-one training. I take only a handful of people every month and those spots fill up fast. So sign up if you want to do the one-on-one training with me. You get 3 1-hour video sessions or video conferences with me. Stay safe out there, traders. Peace.